Good day to one and all. This is Dr. Sivaraman of iknowthis.com. So we are into the new week, 16th to 20th of March, and today is 16th of March. During this Asian Session Live Market Analysis webinar time, I'll explain the derived forecast and also the market reading. Besides, we'll also look into the trading strategies. Now, last week we have seen the market was making big downward move again, and the pair which was making panic drop was GBP last week, and we know that the players use GBP as the currency to create the market sentiment, and this time around they have done the big drop of about 250 pips in the case of GBP. And that indicates that they wanted to make a reversal. As I explained that last week, they are expected to make the sideways move. And this time, they are expected to make less drop and more rise moves during this phase of the month. And this is the quarter ending time. So the players are here to make quick up and down moves in order to earn big from the traders. And they also know whether the traders are net long or net short positions. Accordingly, they make big moves in the market in order to earn quickly. So what we have to do is carefully take positions and close it with profit after keeping stop at entry. That is vital. And otherwise, we may come across a big drawdown and we have to manage it carefully. And see, rather than the analysis rather than trading strategy, if you are more into that of the speculation, so up to what level it can rise or up to what level it can drop and things like that, then that will lead to a lot of disappointment and distress conditions. If you fail to make the appropriate action in the market, then you find the drawdown becomes big and you do not know how to manage it. So my humble suggestion will be, do only the swing trades during this particular time frame also. Last week, we were expecting Euro to recover to the fag end. On last Thursday, I was telling you that they're expected to make the rise in the case of Euro and GBP for weekend, but actually they made big drop on Thursday, later session during the European session, and also they made the drop during the year session, during the last Friday, in the case of GBP especially, and a nominal correction of about 50 pips in the case of Euro. So from that of the earlier low 1.0550, they dropped it to 1.0500 area with a small downward move below that. But in the case of GBP, from that of 1.51, they came down, or 50, they came down to that of 1.47. So that has created the real bearishness among that of the pairs. And that is vital for us to understand that once GBP start creating the market sentiment, the players are here to reverse the market. So this week again, they are expected to make such quick moves, and the range in which the currencies are expected to trade in this week would be from 1.05 to 1.08 in the case of Euro, and 1.47 to 1.51 in the case of GBP. And USD yen is expected to come down quickly to 118 in order to create the USD bearish condition. Then USD CHF is expected to make the swing probably below parity briefly, and then again go above that of the parity. And in the case of Canadian dollar, it is expected to make a slow one-sided downward move quickly for the month end. And Australian dollar is expected to gain quickly one-sided during this particular time frame. So when you look into the live market quote page, we find that Euro, GBP are showing positive net change. USD yen is showing negative net change as a USD weakening move. And in the case of CHF, which is showing 16 pips positive net change, when Euro is showing positive net change, which is a contrarian move in order to gain the levels in the case of Euro CHF. And you find Canadian dollar and Australian dollar are also showing positive net change as a contrarian move. So basically, they are making contrarian moves in order to handle the crosses, and later on, they will try to handle the majors. So slowly, for the week beginning, they will make some false moves here and there in some pairs, and later on, we will find the trending move to happen from the US session. So we have to watch how exactly they are expected to make the moves during that of the US session. Then we'll be able to understand what they intend to do during this particular week. Then, with regard to the initial lows and the highs, what they are set for the day, in order to understand how exactly they are trying to make moves in the market. 1.0471 is the low in the case of euro, and the high was 1.0535. So they are not breached the low, the high. Then in the case of GBP, 1.4735, 1.4772 are the lows and the highs. They are not breached it. In the case of yen, 121.2, 321.45 are the lows and the highs. They are not breached it. Then in the case of CHF, 1.0034 and 1.0074 are the lows and the highs. They are not breached. In the case of Canadian dollar, 1.2784, 1.2818 are the lows and the highs. They are not breached it after forming around 3:30 GMT. Then Australian dollars, 0.7614 and 7659, they are not breached. So which indicates that they are making only small swings in the market from the top the 3:30 GMT, and they are not breached either lows or the highs. So they are expected to slowly make the swings and then probably make small slides during that of the European session, and then start gaining the levels from that of mid-European session. So we need to watch how exactly they are going to create the market sentiment, and they are expected to gain the levels in case of GBP after making an extended downward move last week. And then this time around, euro is expected to gain more when compared to that of GBP to start with, in order to create uncertainty to that of the traders and also to handle euro and GBP crosses. So that's what they are expected to make moves in this particular week. This is a trend reversal time, so they are taking the quarter ending time to earn big money and try to extend the trend reversal time for a prolonged period and accumulate more of a buy positions. So as far as market reading is concerned, they are expected to make, we have to note down the initial lows and the highs around 3:30 GMT, and when the market is closer to low, during earlier the late sessions, not breached the initial low or the high for 30 minutes during our observation. In earlier the late session, we can take a buy near the low or sell near the high and aim for a swing trade and keep the hedge order to limit the risk. And once the position makes profit, keep stop at entry and keep 45 to 75 pips limit, and so that the position can either be closed with a trailing stop. Once the stop is made as a trailing stop, once the position makes 25 pips profit, and then it can hit either the trailing stop or the limit, thereby will be having the minimum or the maximum profit. Now, as I explained that from previous week, the daily saving system is on in the case of the US. Accordingly, the US session times are changed. So this we need to follow here afterwards till end of October. So kindly note down the changes. So mid-European session will be from 9:30 to 11:30, and late session will be 11:30 to 13 GMT. Then gap time will be 13 to 13:30 GMT. The early US session will be 13:30 to 15 GMT. And the late US session will be 19 to 20:30 GMT. And the gap time between the US session and the next day Japanese session will be 20:30 to 0030 GMT. Okay, let me answer to the questions which are asked here. And Jenny has got a question. I am running at a loss in my cable at 1.4890. When I took that trade, I got distraded and forgot to place stop loss. Trade is run now a runaway. Unfortunately, I could not take a shot to hedge myself as my broker does not give the opportunity when in a long position. Okay, as far as GBP is concerned, at the moment it has come to about 1.4750 area, and by US session we should be able to see that it goes to 1.48, and by tomorrow we should be able to see that the buy position, we could be able to close it with a nominal loss or a nominal profit. Probably we may have to wait till you have to keep stop somewhere at least 1.47 level, or if the equity permits, then probably you can hold because it's the lowest level swing. In Jen, if we think cable will make another big drawdown to 46, then I must exit that position today at the highest price possible, 1.4825. Might be highest. Okay, so we are going for all sorts of analysis and trying to find out what could be the intermediary highs, etc. But my humble suggestion will be, if you want to close the position, use a trailing stop and see that it is able to get the minimum loss for you. And I'm expecting cable to go up, so let us see how exactly they are doing it. Then the sequential trend reversal in Euro Yen referred to as a Yen cross or the Euro cross. Euro Yen is always considered as a Yen cross because all currencies which are traded against Yen are called Yen crosses. European crosses are only three: Euro GBP, Euro CHF, and Euro GBP, Euro CHF, and Euro GBP CHF. These are all the three currencies. You call them as the European crosses. Then what's your stand on GBPM? So as I explained that they are expected to gain in the case of GBP slowly and drop in the case of USDN, GBPN is expected to make sideways move. Not a big upward or a downward move is expected. In Shan, Euro USD is set to test low levels, then means GBP is also likely to test lower level. Yes, GBP has already tested the low, and so that's what they had done it last week during that of the sideways move and created the bearish feel in the market. And this week onwards, they are expected to slowly make the upward move. So the upward move will be a very limited upward move, but they will be buying it. So still they will try to make some contrarian moves in order to confuse the traders, because only then the traders will sell at the lowest level. So that you need to keep it in mind. If you got any other question, you can ask me. I'll answer to those questions. So ultimately, what is more important in this market understanding is that they are trying to grab the money from the traders by showing extreme moves in the market. So we need to understand that such extreme moves are not because of the fundamentals or anything else. The players do it specifically, thereby they are in a position to earn maximum when the traders find that it is a stressful exercise. So when the traders find that it is stressful and they are not able to hold any position, then they invariably try to lose their positions, and then later on you find the players earn big from that of such traders. Then Will has got a Will they make less rise, more round, more drop? In the case of USD CHF, euro start making the steady rise, yes. So they will be making a contrarian move. That is, euro will make swing and rise more, but USD CHF would make sideways move and then gain. That sort of things they are expected to make, in order to gain more levels in the case of euro CHF. Then, do you have any book that you published that we can read to learn more about the knowledge, valuable knowledge of the market? See, let me honestly tell you, these informations cannot be published because it is the question of how the market is being manipulated. So when you talk about how exactly the market is being manipulated, people will immediately react and say that the market is so huge, it is having $4 trillion trade every day. How can one individual manipulate the market? That is what they will say. Because they again and again say the same in order to give a mental picture to that of the traders that the market cannot be manipulated. And if you carefully watch it, that you will not be able to place a higher level buy with our online trading platform or a lower level sell to push the market on the upside or on the downside. So only in the bank terminals they will be able to place such orders and move it. And these sort of conspiracies, when they try to do it, we cannot write it in the form of a book because it is against such players and they are needed. See, there are two categories of people or two sets of financial institutions. One is the market facilitator. The market facilitators are the one, they place either way trades. So they keep the buy order as well as sell order. When all are watching before that of the non-farm payroll release or any data release, you find the market is making such volatile move on the upside or on the downside. Do you think that the traders are placing such orders? Not at all. It is the institutions. The institutions place such orders in order to push the market on the upside and the downside to create the market feel. They are all nothing but the circular trades because nobody wanted to lose money in the market. Nobody will say that, no, I wanted to go into the market and lose all my money. No one will say that. And the institutions will not try to commit positions during that of the data release time, even though it is very easy to identify the type of move they do and earn very good money during such data release time. But still, the institutions don't speculate on that, the overall plane. So it is a question of the bankers, especially those banks which are placing orders on behalf of the players. They keep from one bank the buy order, from another bank the sell order, and execute the trade. Only then you come across the bid and the ask and also the trade, what is being done. And these are being displayed in the live market quote page or in the chart or whatever it is. But ultimately, whether they sell and drop it to a lower level or buy and rise it to the higher level, they don't lose any money because it is a circular trade. When they sell from one terminal, the other terminal people buy it. And then later on, the other terminal people sell it and the first terminal people buy it. That is how the circular trades are. This cannot be written in any book. So what I suggest is, already I have given the webinars in FX Trade and 12 webinars explaining my trading system, explaining how exactly the market is being manipulated. So you can listen to those webinars, 12 webinars in fxtrade.net. There, under my profile, Dr. Sivaraman, if you search under my profile, you will come across the 12 webinars are being listed. In 2011, I gave the webinars. You can just listen to them and you will be able to really understand how the market is being manipulated and how we are supposed to trade along with it of the players, understanding fully their intentions and trade accordingly. So I don't have any books published in these conspiracies. I have other books, but not pertaining to this topic. What level did you say cable can rise for me to exit? I could not make that level. He said, could you kindly repeat that, please? So they are expected to go to that 1.49 area, and that's what I said by tomorrow. So if that goes well, then probably you try to keep stop at entry in your buy position and later on watch. Then Autumn. Swing and rise this session, Euro and GBP rise and then slide. Now they will rise again from now. Yes, they will slowly rise and make a drop. And if you see carefully, they have to first of all increase the spread. First of all, they have to increase the spread in most of the pairs and then start making the move. Still, they are not breached the initial high or the initial lows. That means they are looking for the volumes to come into that of the market. Because last week when they made the drop, many of the traders might have cut loss the positions. So they will be hesitating to commit positions now because they will wait for the market to set the trend and then enter into the market. This is what normally happens. So when they go in for a trend reversal, they first of all make a big drop, and afterwards those who have got even the lowest level buy will become bearish and liquidate the long position and say that here afterwards I should not enter into the market unless and otherwise the clear trend is set. So all will be watching. So in such a situation, the players cannot make a rise or a drop for the simple reason that they mainly make moves in order to make money. They have to make small swings in order to indicate to the traders that the market is alive. If they don't make small swings, then the traders will think that it is a holiday. So they have to show the small swing by circular trades. But they will not make any big move on the upside or the downside, because by doing it, they don't earn any money. So the entire exercise will go waste. So they make only the small swing between the high and the low. And later on, during that of the data release or during that of speech or whatever it is, they try to make some quick upward stop and or a downward stop and then they go closer to the top, suppose, and the resistance, whatever the traders have calculated. So in such a situation, what happens when the traders find that it is closer to support, they will try to buy, or closer to resistance, they try to sell. Then they breach the support and go below, hit the stop above, and breach the resistance and go above and hit the stop. They widen the spread to start with. Then again, expect the traders to commit position, because when the traders, when they enter into the market afresh, they take a decision, no, hereafterwards I should keep stop and then trade. There is no later on when the stops are hit, the trader finds that some more loss has occurred. So he decides not to keep the stop, and only when they show a strong support, then he tries to buy. Then he buys that. Then later on, the players gain the levels, and when they gain the levels and go near that of the resistance and hold there, the traders who have taken the long position feels that it is better to exit out of that with about 60, 70 pips or 80 pips profit. He will exit, and later on the players and also turn short in order to participate in the wide range swing, but they continue to rise and induce the short covering. So always keep in mind, they create the market sentiment and also they wait for the traders to commit positions. And once predominant of the traders start selling in the dropped market, they gain the level. Similarly, predominant of the traders try to do buy and sell trade at the highest level, they reverse the market. That's what happened at 1.39, 1.40 in the case of euro. Now this time, around that of the low, they expect the traders to do sell and buy trade. But what happens is, buy and sell trade at the higher level, many traders will quickly take decision and do it. But sell and buy trade near that of the low, it is very difficult for the traders to take a decision. Those who are strongly following technicals, they will only go in for such technical trades. And then once such traders make money and post it everywhere in the web, that I sold it at 1.08 and closed it at 1.05, then that will spread like a virus. And traders who have been watching it all along decide, okay, let me also do sell and buy trade. That is how all decides to do sell and buy trade, and the players take it up. So it is a question of herd mentality. The herd mentality does not happen overnight. So the players continue to drop, and change the market sentiment. Also, they accumulate the buy positions when the traders sell it in distress. So they have to give initially profit. Only then the traders will commit more positions. And then it is easy for the players to trap. Then orange, when to grab a trade. So you wait for the drop to happen during that of the early European session and then try to take a position. I think you should be able to easily book profit. They might go in for a brief downward stop and or a small dip and then gain. At the time, watch for 30 minutes and the new intermediary low is not being breached for 30 minutes up to 8:30 GMT, then you can take a buy. By 9 GMT, if you take a buy, I think you should be able to easily close it by end of the session or during the US session. So for cable at 1.49, or you're saying you're buying a stop at entry, do I understand? Yes, you try to keep stop at entry and then wait for the market to go up. In the event, if you are lucky, they might go to 1.5075, then probably you can book profit also. But at the same time, don't blindly wait. Always keep stop at entry and then wait. So if you understand the low is 1.4697 on last Friday, should hold cable for a higher level. Yes, it can hold it. They are expected to gain, but we need to have patience to hold. So the players commonly take the second week of the quarter ending month and reverse, as we have seen. See, especially during some of the quarters, and see, like the first quarter and the third quarter, they make such moves. The second quarter, they don't make such big moves during the second week. But the first quarter, they have to establish a good profit record. Only then the bosses will decide about the bonus, etc. Similarly, the third quarter, before year end, they have to show, and only then the fourth quarter, the players will get, and the bank dealers will get adequate bonuses. Thanks for the compliment, Jim. Any other? Okay. Do you recommend to read market from 3:30 GMT every day? I'm not clear, because once you're told read market around 8:30 GMT. No, sir. Between 2:30 and 3:30, they set the initial lows and the highs. So you note down the initial lows and the highs around 3:30 GMT. That is the Japanese session. Then the European session starts by 8 GMT. You wait for 8 to 8:30 GMT, the European session, because as I told you, during that of the Japanese session, if the spread is low and not breached the initial high or the low, even for about 1 or 2 hours, then don't commit any position. You wait for the European session to start, and then between 8 and 8:30 GMT, if they are closer to low, not breach the low, then you try to take a buy. And then they will rise, you can book profit. But if they are near the high, between 8 to 8:30, and not breach the high in this 30 minutes, take a sell Then towards close, they will be able to make a slide, will be able to book profit. But the forecast says that swing and rise moves are expected. So you try to do the buy and sell trade, but buy whenever they make a quick drop, as we have noticed that quick moves are false moves in the market. Is it clear, sir? So I take this opportunity to thank FX Trade for the facilities provided to present the webinars, and also you people who have come here to listen to my webinar. And there is one more question, two more questions. Probably I'll try to answer. Then cable will stay above 1.47. That's what expected, sir. And it will soon go to 1.50. And especially when you see that trend reversal happens, which happens in a very quick way, and it takes lesser time for the entire reversal. And from 1.50, they dropped it to 1.47, and quickly they will gain back to that. Then how about USD CAD? USD CAD is expected to make the big slide in coming days. We'll be able to see that. No, it's not a trouble at all. Okay, so I take this opportunity to thank FX Trade for the facilities provided, and also you people for your listening, understanding of the market. I'll come back on Thursday, on 19th of March, and review the forecast what I have given, whether the market is making the moves in line with it, or the expectations are against. We will review it objectively, hence we focus more on the trading strategy. Thank you one and all. Wish you all happy trading. See you on Thursday.